Hey traders, welcome back to Fides trading channel, and we are back again with another weekly flows video. Today is Sunday, the 10th of August 2025, and we will be looking at the week ahead until the 15th of August 2025. If you're new to this channel, in these weekly flows videos, I break down the markets using a top-down approach, starting with higher time frames to map out the bigger picture. By analyzing key zones, trend structures, and institutional behavior on the weekly and daily charts, I uncover the dominant bias and potential market flows for the days ahead. This helps me filter out the noise and to anticipate major moves and stay aligned with where smart money may be positioned. Tune in as I decode the charts and lay the groundwork for the trading week ahead. We're starting with gold, and we are currently on the 4-hour charts. We're going to move to the monthly. Currently, gold is showing very bullish signs on the monthly, weekly, as well as the daily charts. We can see per the monthly time frame that in July we closed with a bearish pinbar pattern, and now we have 4 wick rejections to the upside, which does add confluence to the bears stepping back in. Now we are still trading above the 2150 and 200-day moving average, and we are on the overextended territory on the monthly time frame, which does add confluence to the bearish nature that we could potentially be seeing in this market. Now, that being said, on the weekly time frame, this highlights more the consolidation that we've been seeing for the past couple months, with price trading between the 3,250 and the 3,450 zone. Price has pretty much just been going up, coming down, and just bouncing between these two levels, having some bullish weeks and then some bearish weeks. Now we still see that price is trading above the 2150 and 200-day moving average, and we're still in the bullish region of the RSI. So from the monthly and the weekly time frames, we still have a strong case for the bulls remaining in control. Dropping into the daily time frame, this just highlights in a deeper perspective the consolidation that we have been seeing as of recent. So we can observe here that from April, we had strong push to the downside, then push to the upside, downside, upside, pretty much just staying within that 3,250 and 3,450 zone. Now, this broad range consolidation zone has provided some great opportunities to get some money if you catch the right direction of the trend from the major pivot levels, as I've just mentioned. Now on the daily time frame, we can see that price is trading above the 21-day moving average, but since the beginning of this range, we have been using the 21-day moving average as almost as though it's a bouncing platform to push off. Now we do have firm breaks below it, breaks above it, but for the most part, price is maintaining structure above the 50-day moving average. But when we look closer at the RSI, we can see that we have price trading within the sweet spot region between 45 and 55, with no clear advantage to either the bulls or the bears. Dropping into the 4-hour time frame, we can see that we've just come off a very strong bullish week. We can see that Friday, the 1st of August, we had a strong push from the NFP release. We did have signs on Wednesday that the bulls were taking control from this level, but price had broken below the pivot zone of 3,300 and actually found support at about 3,270. From there, from the NFP release, we had a strong push to the upside, and pretty much for the remainder of last week, price was moving with choppy bullish consolidation and is settling right below the 3,400 level, with price currently at 3,397. Now, just to highlight that although price is at 3,397, we are fast approaching the 3,450 resistance zone that I have mentioned. And I do believe that price, based on reactions from the past, will turn around from said level and actually made some downside movements coming into the next week. However, we need to see how price opens, how price reacts to the 3,400 level before we actually put in any positions in this market. As it stands in the 4-hour time frame, price is trading above the 21 and 50-day moving average. We can see that price actually had a firm drop all the way down to the 200-day moving average before actually pushing to the upside. That being said, price is trading in the bullish region of the RSI, about 55. So we do expect further bullish momentum to kick in at the opening of the week. But however, like I mentioned, this is a very strong resistance zone, so we need to see how price reacts to it. Now, adding to the bullish side, to the bullish confluences, we can see that the futures price is at 3,491, which is nearly a 100-point difference. So it is clear that from a futures perspective, investors are looking to go long on the dollar. And this is a massive, massive gap. So nearly a 100-point difference, and that does add further bullish confluence to this market. So we could potentially be seeing a break above 3,450. But like I said, we need to see how price reacts. If price reacts with bearish nature, we will look for short positions. If price continues beyond 3,450, then we would start looking at taking further long positions. In terms of news, we can see that there are mixed headlines. So we can see gold gains for the week as tariffs go forward. Stock rises, investors' eye. Fed revamp, gold hits record, so that's another bullish. Gold hits record highs. So I think this is more just around the pace in which gold moved rather than actually hitting any record. So I think the record high referred to the percentage movement within a single day. That being said, there are some bearish news coming out of FX Street, where investors are wondering why price is having a hard time breaking that 3,400 barrier. So we'll wait for the markets to open, see how gold reacts, and then from there mark out any key levels we'll be looking to trade, and trade based on market directionality for the week ahead. As it stands, it is bullish, and we'll be looking for further bullish movements, seeing how price reacts to 3,450. But if there's any breaks below structural support levels like 3,380, then we would start looking for short positions. Moving on to Nas100 or US Tech, looking at the monthly time frame, we can see that price has been moving very bullish since April, and we have continued to make new highs month on month. Price trading above 21 and 50-day moving average, and in the overextended bullish region of the RSI. For the weekly time frame, we can see price trading very bullish here as well. Price trading above 21 and 50-day moving average, and in the bullish region of the RSI above 55. We can see some structural levels on the weekly time frame with support at 17,000. I'm just going to say 17,000 for that point, and we do have bullish structure, which would be a little bit more clear on the daily time frame. On the daily time frame, we can see price action making clear higher highs and higher low structures, with the last fully formed higher low at 22,760, and we should actually just mark that off. Yeah, 20,760, and this was created on the 1st of August at the beginning of the month. We can see that investors were unsure as tariff announcements were coming into fruition, but from the first, markets have pushed firmly to the bullish side with this new level being created and a new high that has been created. Price trading above the 21, 50, and 200-day moving average and in the bullish region of the RSI. We can also note that price hit the sweet spot region here and very close to the 21-day moving average before actually reversing and continuing its bullish trend. On the 4-hour chart, we can see that this new bullish trend that has kicked off has created a bullish support trend line. We have two touches here with price trading above the 21-day and the 50-day moving average, and in the bullish region of the RSI above 55. You can also see price coming back, creating nice retracements in the sweet spot regions before pushing for the new highs. Price is fast approaching that resistance zone of 23,680, and we need to see how price reacts to that level at the opening of the week before we determine market directionality. However, as it stands, we are expecting further bullish momentum, and we will be looking for long positions in this market, potentially at the retracement point if price retraces towards 23,500 and 50. That would be my first level I'll be observing. And as it is a break and retest level, and I'll be looking for price to push beyond the resistance of 680. In terms of news, we can see that there's some mixed sentiments here. See Wall Street set for weekly gains as Trump interim Fed picks maintains easing hopes. Individual investor bears stage a comeback. Wall Street gains as Trump interim Fed choice stokes dovish bets. Okay, so some bearish news. New highs, but sputtering thrust is a concern. So sputtering just means that it's not moving with clean bullish momentum. There's just like ups and downs, ups and downs, ups and downs. So it's sputtering along instead of just showing clean, smooth movements to the upside. So like I said, mixed sentiments for Nas100, but for the most part, we are expecting further bullish movements with this particular market. Moving on to Us30, which has not been a fan favorite as of recent. We can see on the monthly time frame, markets are bullish. We did close July with a bit of a bearish pinbar there, but we maintain the bullish sentiment trading above the 21-day and 50-day moving average and in the bullish region of the RSI. On the weekly time frame, price trading above the 21-day and 50-day moving average and in the bullish region of the RSI above 55, but price seems to be having a hard time breaking that 45,000 barrier, which has resulted in some downside movements, and we have seen this in the past, especially around February, where price hit this level and then had a firm drop to the downside. So clearly, price still having a hard time with that 45,000 barrier that has been created. On the daily time frame, we can see that July was a pretty slow month. Price just approaching 45,000, breaking down, coming back for another test before breaking down. So it is clear that momentum is sputtering, as they've said in the headlines, and is having a hard time breaking to those upper echelon levels. Now, that being said, price was a bit bearish coming into August, but at the beginning of August, we did see some bullish pushes. Price still trading above the 21-day and 50-day moving average, but we can see it's having a hard time maintaining that momentum, and we have some RSI divergence that is at play. Now, on the 4-hour chart, just highlights that strong push to the downside, where price actually found support at the 200-day moving average on the 1st of August. Actually had a strong push to the upside before actually just consolidating for the remainder of the week. So that's why I'm kind of just staying out. Any movements that are coming out of this market are super erratic and mostly based just on fundamental news releases, with price having, again, a hard time breaking that 45,000 barrier. So we're going to need some sort of black swan event to actually break above this level. And for now, I'm just hedging my bets and staying out of this market. I don't want to trade bearish because we can see that the downside potential is very low, and I don't want to trade to the upside because of that 45,000 level and no clear indication of breaking above it. So mostly for this market, what I'm doing is scalping New York opens or USD news, big USD news releases. I think that's the best way to kind of trade this market, but in terms of long-term swing trades, there are none to trade. So yeah, long-term and intraday trades, there are very little potential for those. So yeah, scalping this market, but scalping is not really my forte. I prefer intraday trades. Taking a look at the VIX index quickly, we can see that the VIX is currently trading at 15.18. I actually thought it was 15.15 for some reason. But anyway, trading at 15.18 from the opening of the week at 20.4. So it is clear that investors are showing risk on sentiment, and meaning they've stepped back in, and the bulls have stepped back into the indices and are comfortable taking risk while removing gold positions. However, I'm still cautious as investors are edgy with current fundamentals being thrown about regarding tariffs. And this week we do have some strong fundamental news releases, which I'll get into after we cover currencies. So looking at currencies for this week, we can see that Euro seemed to find some bullish momentum as USD weakness seeps back in at the beginning of the month. Yen is seeing moderate weakness per the index. Just get to the index here. Ooh. Yeah, clearly need to just work on these skills. Yeah, so yen is seeing some weakness and is trading within that 67 and 70 range again. But yeah, a lot of weakness coming through from the yen. This is shown in the charts. We can see that the dollar had some strong upside potential, but with the dollar weakness stepping in at the beginning of the month, it is kind of evened out the playing field against the yen. In terms of euro yen yen's just been moving super flat, so it is clear that these two are moving in very similar circles, but bullish momentum still remaining intact, but we can see very choppy nature here and consolidation upon the 21 and 50-day SMAs. So not much to trade from that perspective. In terms of Euro USD, like I mentioned, Euro gaining some strength against the dollar off the back of dollar weakness, but still has to contend with the major pivot level at 1.17747. So expecting further upside here, but we'll have to see how price reacts to that particular level. In terms of fundamentals for the week, let's take a look at Forex Factory quickly. So Forex Factory, we have some strong fundamentals coming out of the week. We have Tuesday, 2:30 p.m. core CPI. Wednesday, nothing. Thursday, we have core PPI, unemployment claims. And then Friday, we have retail sales that we need to look out for. On top of all of that, please keep up to date with the tariff releases, as those are major momentum movers of the market. I do think it's important to keep up to date with that. Check out FX Street and TradingView. You can see here the way I've set up my TradingView account actually allows me to read some of these headlines as I trade. So stay up to date with these news releases. Just read the headline, see what it says. If a particular headline catches your interest, do a deep dive into it. It's only going to help your trading in the long run. But with that, please note that this is not financial advice, but my personal opinion on the current state of the markets. Before taking any positions in these markets, make sure to do your own research first. And I wish you all a very successful trading week. I know it's been a while since I posted a video. I've been a little bit busy, but I will be back to posting more consistently moving forward. Like and subscribe for more content, and comment on what you'd like to see more of in the future. Happy hunting, traders, and I wish you a successful week ahead. Cheers.